Hey everyone, welcome in to a daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, let's talk about technicals a little bit, more just focused on the precious metals, at least initially. Gold and silver pulling back today. Let's start with gold, as gold is down about almost $30 on the futures contract, sitting at 1950, right on the button as we are chatting. Really, gold's just trading in this range from a low of about 1900 up to about 2000, give or take about $10 on either side. I know that we were due for a correction, and everyone was saying, well, maybe that correction's over after just a couple weeks of weakness. You've been on this show saying that, hey, look, it looks like it needs more time, whether that is price correction much lower or simply just a almost sideways consolidation, correcting for time just to alleviate some of those overbought levels. What do you think about gold's action this week and this really trading range that it's been in?
Well, we've been looking pretty good up until the last 2 days, I would say. And, as far as the short term, I've been more on the bearish side. And so I looked at that 2008, 2009 comparison, that analog, and it did, at least for GDX did correct 23%. And then it actually rebounded all the way back up to the high before correcting another 21%. So based on that, I mean, I told subscribers, well, it's possible that we could have a rally here for a week or two. And we could get back to those highs, even though the initial correction in GDX, I think, was only 16%. So the initial damage as far as price was too mild, in my opinion, but it was still possible that we could have a little bit more of a rally before doing another leg lower. So, but looking at the action of the last 2 days, that looks to me like, I don't think we're now going to rally back up to the high. I think we're, the probability, at least in the short term moving forward, is lower rather than higher, and that's fine. And like you said, I mean, we had this great move higher for 4.5 months or so. That's not going to be corrected in only 2 or 3 weeks. So I know that people were thinking, silver is going to go to 35, and we're GDX is going to go to 50. We're starting another leg higher, and I didn't see that happening, given that we were so overbought based on all these indicators and metrics a couple weeks ago that it just logically we weren't going to. Logically, the market was not going to only correct in 2 or 3 weeks and then run back to new highs. I mean, the only way that would be possible is if you have a really, really sharp correction in price. And we do see those sometimes in bull markets when the trend is really strong, but you get quick, sharp snapbacks in price. And like I said, GDX only corrected 16%, which is pretty mild compared to history. So when I look at the stocks now and I look at the metals today, I think we're reverting back to the larger correction and consolidation that is likely to continue moving forward over the short term. But with that said, Corey, that doesn't that I trimmed one thing, but that doesn't mean okay, you need to sell everything or sell some things. I mean, I've said in recent weeks and months, like buy and hold. And various individual stocks have still performed pretty well, even though the market has been in this larger correction and consolidation. So that's how I see it.
Okay. Yeah, and I think that's very fair. Right now is the time to be patient with your good stocks. Let some of them run if they are running, maybe on the back of good news. And quite frankly, we're not seeing huge drops in a broad number of stocks, or at least in my portfolio. So it's one of those that I think a lot of people are sitting on some of these stocks saying, man, I could loosen up. I could take some of these profits off the table. But since these stocks aren't correcting that horribly, and since, let's say, gold is really not that far from those recent all-time highs, people are still thinking that there could be a pop coming, which isn't out of the question. But again, just a little bit of time could be needed here. What about silver? Because some of the recent comments have been that silver had been performing better than gold. It actually had been. It popped just above this little trading range that it was in. It wasn't in such a defined trading range as gold. As just recently, just yesterday, silver almost got to $30 an ounce, which is very close to its recent its recent highs, not all-time highs. What are you seeing in terms of silver and how that was outperforming gold?
Well, looking at the last month, in silver, you have a positive divergence compared to gold, where if you look at this little correction, silver actually, if you look at a daily chart for 1 month, you can see there's a slight positive divergence for silver against gold. And part of the reasoning for that, I think, is the stock market has been really, really strong. And when you have that in the background and you kind of have an increase in economic optimism, or we could say a decrease in economic pessimism, that's going to benefit silver relative to gold. So I think that explains why silver has been outperforming gold. But at the same time, Corey, I mean, I like to look at SILJ instead of SIL, because with SIL, those larger silver producers are heavily involved in gold. So I think SILJ is a better indicator for silver stocks, and that's kind of been lagging silver a little bit. I mean, it never looked like that was going to make a move to new highs, even though silver got pretty close. So I think the stock market has been helping silver here in the short term, but I mean, it has made a clear bearish reversal today, down almost 4%. So yeah, I know silver has been leading during this correction, which is, that is a good sign. You'd rather see that than silver underperforming gold, but this had a really strong move higher, and I think we're probably, again, I think lower is more likely than higher here in the short term. And looking at support, I mean, we have initial support of 26, and then it looks like there's support around 24. So I would not be surprised to see this head down to 24 in the next couple weeks.
Jordan, what about the environment that we're in here where the U.S. equity markets have really been outperforming the precious metals? I mean, the U.S. markets have been boring, but it seems like day after day they're up 0.5%, 0.25%, maybe sometimes even 1%. Money clearly is a bit more distracted in the equity markets, but it doesn't seem like there's a whole rotation strictly out of precious metals into equity markets.
Yeah, I don't really see that, even though if you look at ratio charts, they're still above all the long-term moving averages, and they're basically just correcting, consolidating, digesting the recent gains. But with that being said, if you're just looking at the short term or the last month or two, precious metals have been underperforming the stock market during this correction. So, and that's another reason why I never thought that this rebound was going to turn into a leg higher and make higher highs. The strength is not sustainable when you see the stock market leading precious metals, but precious metals are still rising. I mean, that's more of a corrective move, in my opinion. But I think the environment, Corey, looking at everything, if you look at like things like break evens and you look at how commodities have been performing, inflation or at some point stagflation, because eventually when long-term yields start rising, at some point that will negatively impact the stock market. I mean, that's when this strength in the stock market will slow down or end at some point. So I think what we've seen over the last couple of months is kind of a sample of what could be coming over the next year or two, and that's higher inflation and stagflation, and that I think is what we need to prepare for moving forward. But with that being said, we could be in a counter trend move here where the dollar's been really, really oversold, so it's due to have some kind of a bounce, and precious metals are due to continue to correct, and then the same could probably be said for some commodities in the stock market as well.
So does that mean we also have to watch the dollar very closely? I know that's been on everyone's radar, as it has been pretty significantly breaking down. But even as you said, it's oversold. It's due for a bounce. Even some comments out of Europe today are causing the dollar to bounce and the euro to sell off.
Well, in my opinion, precious metals really lead the dollar. So, I mean, they have been since early August, they've been correcting anyway. And the dollar actually, and this is another reason why we're in a correction, is the dollar made a new low, but precious metals did not make a new high. So precious metals really they lead the dollar in my opinion. So I more take my cues from what gold and silver and the stocks are doing. And then second, the dollar is kind of secondary. I don't look at the dollar and say, okay, well, the dollar is going to rally. Precious metals are going to sell off. I look at it as more the other way around. So it's just a fact that the dollar has made this huge move lower, and commodities, precious metals, equities are really overbought, and risk is rising in the short term as far as the long side. I mean, that's more so with the stock market than precious metals because precious metals have already been correcting. But if we do see all of that sell off, I mean, that is conducive to the dollar having a bounce.
Okay. Jordan, we'll wrap it up there. Not much more to cover here for the precious metals, but again, just pay attention to what the U.S. equity markets are doing, what the dollar is doing, and that does just show you where money flows are moving and where investors are focused right now. But overall, nothing's wrong with the gold price or even the silver price correcting sideways for a month, even a couple months from these current levels because the miners and, even the juniors, they're cashed up. Stocks are looking better, and now it's time for these stocks to simply produce, make some discoveries, keep on producing, keep on making money. That should continue to drive the stocks in the longer term sense higher. Jordan, thanks for your time today. Have a great rest of your week.